biggest reason is I have been getting through one of these combines. I decided to take one back in January. I wasn't going to do it, but I said, you know what? Let me give it a shot, and I passed. And I'm now in what's called a XFA or something like that. It's still like I assume it's still SIM. I believe it is still a SIM account, but it's being classified as a express funded account where you can get payouts and everything else. I'm not really interested in that because, quite frankly, I already have my own money. But I just kind of wanted to do one of these just as a little bit of, I guess, certification to myself that I could still do it. Now, full disclosure, many years ago, I had passed many of these combines. I think upwards near 4 or 5 of them, and it was a lot different back then with these funded accounts. Much different in it being that you literally got tossed into what was, I believe, a real account right out of the gate as soon as you passed. Because you needed to pay for a data feed. They actually gave you it really looked like it was a real brokerage account. I don't know if it really was or not at that time. Likely it probably wasn't, be candid. But, it looked and felt like, you got you had to get a rhythmic data feed that you had to pay for, and you had to fill the forms out. For the FOMC and all that other stuff, or whatever they call it, the SIP, whatever it is, the Chicago, whatever it is. And you were tossed in this account, but the difference is then you literally had 10 days. You had 10 days, and you were on the clock, and I believe you had to make, regardless of what combine you had to make $1,000. And it was literally set up for failure. There is no question about it. And I know a number of times when I went in and into these accounts, I was like, and literally every account but the last one, I just gave up. I was like, and wasn't that I couldn't make $1,000. I don't want to be under the pressure to make $1,000 in 10 days. To me, you're just forcing people to trade like idiots. And so I believe I remember it pretty vividly. The last one that I did, I had traded like 2 or 3 times. I want to say I had like 150 or I was like $150 or $200 in profit in the 10 days. And I remember literally just like going all in at one point. I was on like day 9 and I was like, you know what, screw this. And it didn't even get to 1,000. I actually made money on that trade, but I think I only got up to like $600 or $700 or so, or whatever it was. And the market closed, and it forced closed me. And I was like, I'm never doing this again. And that was probably, I think, back in 2016. So it was almost 10 years ago that I had done that. And then I just did this one, and completely different animal. I did do it with Top Step because that was the company that I was familiar with. I know there's all these other companies, just not familiar enough with them. And I know they all have their pros and cons. And when looking at all these, combines and payout things, unless you're going to make a career out of it, I think again, when I mean career, if you're going to make a career out of going and passing combines and getting funded, then maybe it matters like where you are. But if you're not, like myself, I'm just looking to do this to just add on to some of the things that I'm doing. And so that's kind of where we're at. And so that's why I'm at Top Step, because it was the one that I was most familiar with. And I found the rules to be a little more in line with the way I trade, because I don't trade every day. I don't. I don't trade every day, especially futures. There's days, I mean, there's even weeks. I'll go 2 weeks and not even put a futures trade in. Because if I do not like what I see, I do not trade. And I've developed that over the course of this 30 plus year of history that I have, only because I've learned that, you don't have to trade every day. And if you feel you do, you are going to set yourself up for failure. So that's kind of where I'm at. And the markets overall, I think, as far as volatility is concerned, I believe these markets are absolutely untradeable for a retail investor, unless you're doing small little micros. And I've actually found myself in the last month, all I'm trading is micros, because I just I don't want to get tweeted, as somebody said. And what I mean by that, right, I don't want a tweet to come out and be in a position, where I've actually built, or maybe I got a swing position on, and then all of a sudden it rips the other way. And it's good and bad, right? It's not even just going up or down. It can go anyway. And so I've decided that the best way to handle that is just trade micros. And I've been doing 1s and 2 lots. So the most I'm actually even risking on any given time is, $50, $100. So, and then you're getting all this slippage. Anyone who's been trading this, if you're trading in a real account, there's a ton of slippage going on right now. And, that's just natural when you have volatility over 20 and the way these markets move, you're going to get slippage. And so that's that. So that's kind of my shtick here in the beginning to kick this off. I'm going to try to do these again in the morning here. I know a number of people have actually reached out to me directly and, said, where you been? It was cool you were doing the videos again. One of those 10 to 15 people that actually watch my stuff. So, I'm going to try. But I'm not going to guarantee anything because, again, I as I mentioned to everybody, I do have a day job that's very important to me. I work for an incredible company, and I do not, want to jeopardize that in the least bit. So, that takes priority over this. Although I love doing this, the day comes when I retire, you'll see me on, you'll know I'm retired when I'm on here every day, back, and then you'll know I'm retired. So anyway, let's jump into some of the indexes. These pivots have been, I'm going to say they've been almost irrelevant to a point where none of them have actually really been of any consequence because we've gotten such fluctuations, and I don't care what the indicator is, and what it is that you use to measure the markets. Basically throw it all out the window. It is all about headline risk right now, and trade accordingly. And so I'm not going to not point out what the levels are just because they're meaningless, because when all things are normal, like they have been now for about 20, since the close, for about 20, almost 12 to 15 hours, a lot of this stuff all comes back into the fold. So, and when it's going to come back in the fold, I don't know, but I'm not going to just ignore it now. But one key level right now that I'm looking at is 67.11 right here. Let me get my pointer. Let me get my pointer. But 67.11, and the reason my icons are too small, and the reason I'm looking at that is we have a We have a low there from, excuse me, we have a low there, and we also have a pivot. So, and you're looking at right here. So I would mark that, and that is going to be as good a place as any for a possible long today, given the breadth and where we've gone. This is the ES. Where we've gone, coming down and tagging 6711 is not out of the question anymore. And if you look at the breadth from S3 to R3, pretty decent range. It's actually shrunk quite a bit. And although we've actually had a lot of gyration in this market, overall, we really have not gone any place at all. We are pretty stuck in the mud. But that is one level that I am really concentrating on today and the days to follow, because again, as I said, there's a couple of things going on down there. And then if we actually zoom out, I believe there's a low volume node down there on the 4 hour. So let's go to the 4 hour. And the 4 hour is, to me, one of the big, there's this low volume node, and we'll just kind of focus in on this. Right above it. You see this hole right here? So we have this low volume node up here, and then we also have it followed by, a very large band of volume on the volume profile here, which is a high volume node. And, again, you have all these things kind of going on in that general area. And look, it could all turn out to be witchcraft, folks. You know what I mean? One tweet, one thing, some crazy random event, and, throw it all out the window and look. And just, I want everyone to understand that that's kind of how you have to be in general. And that's the reason why, folks, I don't have 1,000. You don't see me with 1,000 indicators on my freaking screen. Because, look, I've been doing this long enough to realize that every indicator ever created for forever has always been based on two things: price and volume. And that's it. And I think you could probably incorporate some newer indicators that have AI that may even follow social media and headline stuff. So, and you have that going on right now. So, but a lot of those are not really mass produced to the public. So anyway, that's kind of where I'm looking on the ES. And then as far as to the upside, I don't know if I'd be willing to short this market if it gets any kind of momentum and moves, because you could get wrecked. But if I was looking at some short-term stuff, I do like R2, which is 68.56. And you can see we've tagged this. This is a high from yesterday. So, and then the fact that 58.56 is right above that, again, puts it in a good spot. We try to find these areas of convergence of many things, at least on the things that I follow, right? So we have a pivot, we have a close, we have a high, not a high, but a close, but a high. And then, the third thing I'd look for is something on the volume profile. Is there something sticking out there? And we do have some decent amount of volume showing up here as we get in this point of control area. So again, that is going to be another area that I'm going to be looking at. And likely what I'll do is I'll put in two alerts. I'll put one at that high, which is 68.52, and then another one at 68.56. All right. And that's kind of it today. As far as the big ones, those are two that I'm going to be watching right out of the gate as some interesting ones. Now, one you may want to watch on the open, and we do have news at 8:30, so a lot of this may actually be mute. But, the other one that I would watch on the open is this S1, because you have the low in, and then you have it's 1666, and so this marking is 67.6350, and you have 67.6650. So I kind of like that, but again, I would only look at that spot at or near the open, and then specifically after 8:30, because this actually could get even taken out at 8:30. Just in volatility, right? Because every time news comes out, you're going to get that, that bit of reaction where it's going to spike up. You're going to get those wiki events if you're actually using a shorter term. So I'm using a 4 hour, but if we were using like a 1 hour or something like that, you would get some wiki stuff, and even 15-minute. Again, you'd get a lot of wicks in here as volatility kind of, expands during that news event. So anyway, that is kind of what I'm going to be looking at. For today, it looks better on the 1 hour. You can see we've actually had we had a touch on this was it overnight? It was actually right at 6 o'clock yesterday. So that is about the size of it. I'm not really going to mess around with the pivot or R1. Even R3, I have. If you notice, I have an alert up there, or do I have an alert? I don't have an alert. I have one up higher than that. I'm going to move that down. I do have an alert there. Now I have an alert there. And that would be more just so that if I'm doing something else that I get engaged. The better spot here is going to be up here at the swing high from back on the 5th. 69.01. I'd be looking for something up in this area here. So if it does tag R3, your premium entry is going to be upwards in this area here at this 6,900. That big round, the BRN, that big round number. And we've had a really hard time getting through that and staying there. And now, technically, I'm going to spend a little more time on the ES. This is not overall good on what I'm seeing here. And as much as it pains me to say this, because I feel like I've changed my ways over the last 4 or 5 years, in that I'm not so uberly bearish all the time and always looking for things to fall apart. But, there always comes a time when you have to start looking at things and say, are we really starting to build into a bearish type of situation? And again, I'm not saying it's going to last forever, but I'm looking at it even short term. This just doesn't look good to me. We have, a number of levels here that we're going to need to get out above before there's like an overall complete sentiment change here. I mean, otherwise, I think you're just going to be in this business as usual, grinding nowhere market. And I've been saying it, I think I even said it a month or so ago when I was on here. Market needs there needs to be a catalyst to get this thing up and over and back into bullish territory. And I'm just not, again, I'm not seeing it. Now, I'm not going to be one to come out here and say, it's going to crash. It's like, I can't stand those people because, the one thing I can't understand about the people who say things are going to crash, and look, they're right sometimes. But the one thing I don't understand is that where do they make their money the rest of the, there's that 5% of the time when we actually crash or, consolidate, get these big hits, what do they do with the rest of their time? I mean, unless they're completely full of shit. Because look, I've been on that side. I was on that side for upwards of a decade. And I quickly learned, although I did make money, I quickly learned that, positioning yourself for the next crash or the next time the market blows up puts you under a lot of stress and a lot of strain during that time, because the good times generally last longer than the bad times. And the sad thing is that, I honestly don't think these people really understand that. And again, I guess they make their living off being a perma bear. Now, and I don't want to be there. I always feel like I try to trade the market for what it is, rather than be on one side or not, because I just want to make money, just like anybody else. I don't give a shit if I'm right or, I don't even care if I'm wrong. If I'm wrong and I'm making money, I don't care, right? So anyway, that is kind of what I'm seeing here, and I don't really, I'm not really putting all my chips in the basket for this thing to go higher. And I've noticed that the last few trades that I've actually put on were all bearish trades. So anyway, there you go with the ES. Kind of spent more time than I wanted to on that, but that is kind of the story there. The other thing that I've added to, and if you noticed, they were running a promotion here on TradingView. At least for me, they were offering a promotion that I could get this for 6 months for free. So I decided to sign up for it, and I really like it. And this is the footprint charts. And the reason I like the footprint charts, especially when you're trading, is at least it gives you kind of like X-ray vision into the candle. Right? Because you see the candle here, and you're not just getting like wicks and entries and like you got a hammer and all this other bullshit. You're actually now, I know a lot of this stuff is not even overall accurate. It's like an interpretation, mostly. But, at least it is a little more intuitive, in my opinion, than just looking at a candlestick chart. And the way I'm using this, and I'll show you this setup. The way I'm using this is I'm using row size auto. This doesn't even matter. I'm doing cluster and I'm doing delta. Now you can do ladder. I mean, and that is actually pretty nice too. The thing about ladder and buy and sell is that to me, it's a little more, because you're getting both sides here. And you can actually see where the imbalances are. And that's overall fine. But I'm not, I'm not an institutional buyer where I really give a shit. I just want to see delta, right, is kind of my shtick. And the reason I use that is simple. I'm trying to reduce noise is really all it is. Like, I just want to see, look, was there more buyers or sellers, and then were the sellers stronger there than the buyers? And that's kind of really all I want to do. And it's really more of entry. Like when something gets down near an entry point of mine, I'm going to be looking at this for, all right, it hit my level. Now, is it a good time to get in? Or should I wait and I can actually see, possibly where, the selling kind of tapers off or the buying tapers off, depending if I'm getting long or short. But I do like this. I don't know. I know it's kind of pricey. I want to say it's I think it pushed my subscription up to $500 or $600 a year. To me, that might not be pricey for some folks. That's pricey for me because I just don't usually, I paid for a couple platforms in my life and I don't even use them anymore. And that's why I always hate spending money on platforms, because it usually always turns out that at some point I don't wind up using them anymore. I wind up finding something else, but anyway, with that being said, I don't use Ninja anymore, and I used to use the footprint charts on Ninja. And now that I'm here, I've kind of been without the footprint charts for over a year now, I want to say, because it's been over a year. And it's nice to have them back. Again, I'm not going to come and say, oh, it's a game changer, but nothing's a game changer. And it's more of a feel than anything for me, because I've gotten comfortable with it. So I highly recommend it if you're looking to do it. I mean, to me, it's actually an easy way to get used to them. And if you want to do them get them and use them on another platform, go for it. Because I know they all charge for it now. Like it's some kind of big deal. Like it used to be fucking free everywhere. Because it was just data that they had already, and it was like, and then all of a sudden everybody was like gravitated to it. So now they're like, oh no, we need to sell it. So anyway, there you have it. Footprint charts, yada yada yada. So anyway, I beat the snot out of the ES. And you can see on the footprint chart here how nice, right? Like, so we had a buy and balance, and then boom, right? Look at that buy and balance that just came in right here, and that's what the blue is, and then all the way up. And then you're able to see that. Now, it doesn't do you any good unless you were in a trade, because really what did it do? But it looks really cool. You can't deny that looks cool. And that if you really are a shuckster, and you're out there slinging some Discord or some dopey subscription service, you could go, hey, look at this, it's great, yeah, you thought it, subscribe, or you're the one with the balloons and all the other fucking crap, what do they call it, the book map shit. Oh my God, I mean, my God, this industry, I swear to God, it's so fucking, it's just so ridiculous. And now the big thing is everyone knows, right? Book map. Oh, you got a book map. Yeah, book map. I mean, so you know what? Change these. You know what? Do yourself a favor. Take a Pine class and then change these to bubbles. That's all it is. That's all it is. They took order flow and they made fucking bubbles out of it. I mean, like, I don't know, man. Like, I tell you, just wake up, folks, and just kind of like, and see what's going on out there. It's a cesspool, and it's more of a cesspool than it ever was before because of the internet. That's all you see. But anyway, I digress. So anyway, that's the story on the ES. Russell, been absolutely untradeable. I have not been able to trade this thing. It has been all over the place, very wicky. Fast tapes, like you can't even you're up a couple of hundred and you're down a couple hundred in a matter of a minute. This one has probably been the worst out of all, and it's obviously because of liquidity, right? It's not the biggest traded index. The NASDAQ and the ES are, so it tends to be more liquidity in it, and so that's been the problem with the Russell. So anyway, and that's kind of the story there. Now, let's talk about crude oil a little bit. The ladders on this and the order flow on this has been like something to I've been amazed about. So I really don't have any position short term in crude oil, but one thing I do have in crude oil, and I'm kind of beginning to, and we'll talk about Oracle in a second, and beginning to set myself up for either failure or success, is I'm short oil, and I'm going short oil out in April. And the way I'm doing isn't doing it through the USO. Now, I hate this fucking thing. I hate this. If there's anything that I hate worse than the USO is the UNG, which most people know. But I hate this thing. But I really got you really have no choice. I really do not have any choice to use it because I was looking at futures options on CL and I did not like their pricing. And the problem with options on CL or crude oil, even if I do something out in April, I'm going to be sitting on those suckers for at least a month or a month and a half. And the reason is right, they are not going to come in. Those options are not going to come in until maybe a week or two before they expire. And I do not want to be in that situation. And so that is why I decided to do the USO. And I'm playing it small. And that's the other reason I'm sticking to the USO is I want to play it small. And I'm not doing anything fancy, folks. I'm not doing any butterflies or blah, 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 blah. I'm just doing simple shit. And then one trade that I put on that it's actually working so far is I did a simple 195 put spread out in April. I also just put on yesterday a 90, if this thing would not stop moving, a 90.85 put spread in April. And then I also, before the end of the day, when oil spiked yesterday, at the end of the day, it did spike a bit. And before the close, I just went and bought an 80. Didn't even do a spread because it was cheap enough. And again, if you look at what I'm doing, is I'm laddering down and I'm trying to basically take a couple of swings here on crude oil doing a little collapse. And, and I've spent maybe, let's take a look. So I like to tell people right up front what I spent. It says there's no capital requirement. Okay. I spent $500 so far on those trades, $591. All right. And I'm probably looking to risk upwards of 700 or so. So I might do one more trade, one or two, depending on how it goes. And that's kind of how I'm playing it because I strongly believe that oil right now, and like some of the other commodities at their time, I think oil short right now is probably the safest bet on the market. Now, is it going to be volatile over this time? Absolutely. There's no question. I mean, it's likely probably going to spike back over $90 at some point. But, I just feel the risk is worth it. And I'm in a position where, look, if oil goes up, my account's in a position where I own a ton of oil stocks that I'm not going to get blasted. So this, in a way, is kind of a little bit of a hedge on my oil stocks where I'm actually short oil. So again, that's just my take on this. And the way to do it was through the USO. Because I just didn't like what I seen in the CL options. I really didn't. I was like, if I were to do, again, and I'm looking to take cuts here, folks. I'm not looking to, I don't want to be in the money on stuff. I'm just looking to, right? I'm taking the freaking cut. I want that home run. I was looking in April, same expiry as where I'm at now, and one spot I was looking at last night was the 80s. And you can see there was a decent amount of contracts there. And I was going to do an 80.79. And I was like, all right, it's not bad. It's only like, $500, right? But what I don't want to be sitting on $720 worth of buying power to be in this trade for another fucking month and a half, because that's what it's going to take. Because even if this does, let's say this does fall. Let's say it goes to 75. Let's say crude goes to $75. This is not even going to really make money or come into money and start producing a decent profit or getting anywhere near this max profit until a week or two before. And I don't want to sit in this thing I'm looking for this thing to fall in a couple of days and get the fuck out. So anyway, that's why I just didn't like what I see. Now, there's going to be people who say, well, why don't you sell the options? I do not like to sell premium in futures options. I have gotten absolutely wrecked. And I'm not going to say wrecked to the point but I have gotten wrecked on those trades where, I sold a call option, something similar here. Let's say I went out to April and I sold a 100 because that's about where I would go and sell a 100, 101. As many of these I've literally almost always experienced a loss. Even with volatility, if volatility collapses, it just doesn't work. It just doesn't work as cleanly on the futures options. And I don't care what anybody says, it don't. And I'm proof of that. Because even if this does have a volatility collapse, these are not going to come in until about 4 to 5 days before they expire. And I don't want to be under that risk. And I don't want to lock this up because this is true capital here that I'm extinguishing. This is like $600 worth of true capital because it's a futures market and it has settlement. And so I don't want to be riding on that. And so, that is why that's why I wouldn't do this trade either. And then what if it does what if it goes to 120? Do I really want to realize this? And then, the thought process, I'll roll it. Fucking dude, come on. That shit's old. That's old. And I do it. I do roll contracts from time to time. But you know what? Once you start getting into rolling contracts and doing all that shit, you maybe get 1 or 2 rolls and then you're never getting your fucking money back. And I always found that, if you have a shot at recouping your money back, you roll it. If you don't, just get the fuck rid of it. Just get it off your books. Because it could just end up rotting there and being in your account and never coming back. And you never make your money back anyway. And look, and nobody wants to hear this, but I'm just going to be quite honest with you. And I've been involved with all this shit for quite a time. That whole rolling thing is a perfect way to get people to fucking generate commissions. And don't think that that's the whole that's not the whole. Look, I don't think that's the entire premise, but don't think that that's not part of it. And so anyway, that's my opinion. So just be careful of that stuff because there's stuff like that makes me question, look, man, the futures don't operate the same way as stocks when it comes to that shit. And I'm a perfect example of it. I mean, I've done it more times than you know. And I can honestly say 9 times out of 10, they don't work. So anyway, that's why I didn't do anything in CL. And that's why I went with USO. And and the problem is you can't really do this with anything else with oil right now because this is really kind of the only thing tagged to the futures contract. So anyway, that's it. That's USO. And that's what I'm doing there. And, and next I'm going to talk about gold. I think the whole thing with gold for me is I think if you're trading gold futures, good luck with that. If you're able to hold a stop in gold futures, you're golden. But it's very hard to hold a stop in gold futures. They've been really great from time to time. But one thing to be aware of too, and anybody who's trading gold futures in these futures, in these combines, in these funded accounts, they're starting to put a lot of restrictions on trading gold in these. And I'm also seeing now they're starting to put restrictions on, crude oil and things of that nature. And the reason is because, put it in perspective. All right, although there's probably a ton of people that aren't making money, the people who are, right, you got to figure that they're making money in these so-called express, and they all have them, and it's express funded account that's not technically live, right? And they're banging out all these profits, and they're basically all just, let's face it, they're all just rolling the dice. And for the people who it's working out for, they're having to pay out, and they may not be paying out 100% on the dollar that they make, but they're still having to pay out for money that they technically never made because it's not a real account, it's a SIM account. And so that's why you're starting to see all these restrictions on crude and gold. And because, there's people making bank off these SIM accounts and getting paid. And these funding companies just can't handle it. And I think what you're going to see going forward, and I would think in the next few months, you're going to see a few of them go under. That's just my opinion, because you can't pay out more than it's Bernie Madoff all over again. You can't be paying out and saying you're making all this money and paying dividends and then not have the funds underneath. At some point, the rubber meets the road, and so I think you're actually even going to start seeing a little more restrictions on these express funded accounts too, and payouts. I think they're going to wind up putting more restrictions on the payout factor on those as well. So anyway, there you have gold as well. And then the only way to play gold to me is really in GLD. And what I've been doing with GLD, and it's working so far, is I've just been buying out in January. And I just been laddering up call spreads. And you see here I'm at 550. I just keep dialing them down. And I've been doing this for a while. So, and I think that's a great play. Go out of the money. Don't go crazy out of the money. When I bought these, they were all around 30 to 40 deltas. So, to me, that's about the sweet spot, is about a 40 delta out of the money. So, and it's a cheap way to play it, because for 525, 530 call spread, I'm spending $1.50. My max profit is $3.50. Look, I only have a 35% probability of profit, but I got 300 days for this thing to be 500, which is only $25 away. I mean, really, the way gold's trading, this literally only has, this literally can do that in a week, even less. So that's the only way to really play gold to me, because I'm not doing it in futures. I'm not doing it in futures options. And that's how you play. Same with silver as well, is SLV. And I've been doing the same thing with that. Anytime it's been pulling back. I did do some stuff in June, but most of the stuff is out in January. I'm doing leaps. And same thing. I'm getting the 40 deltas. And I'm going 40 deltas. And so that's the way it is. And again, they're cheap trades and keep you engaged. And where if it doesn't, and you're giving yourself a ton of time for this thing to go. So so there's that. So that's kind of the story there. Let's look at Oracle. I did not do anything in Oracle, only because I have a position in June that I'm getting my freaking arse kicked. And I love showing this to people, because this is the reality of trading. This is what I have. Oh, that's AIM. This is what I have in Oracle. I have a 220, 210 put spread that, and I've rolled, this is another one, like this is like perfect example, right? This couldn't come up at a better time. This is one that I was wrong in, right? And I've rolled it a couple of times already, right? And, looking back, I should have just fucking dumped this. I should have dumped it. But now, again, I'm stuck. I'm stuck in it. So I'm going to roll it. I'm going to keep rolling it. I'm never going to make my money back. Let's face it. I'm never going to make my money back. I know I'm never going to make my money back. I may cut this in half. I would have been better off just doing something else and getting out of this, because I think I'd probably be in a better spot if I would have just done something else than just hold on to this piece of shit that's just, eating me up. But, again, this is the tasty way, right? Again, like, folks, not everything they do over there is logical or common sense. And again, I only know, and you might say, oh, well, that's your fault. No, this was a trade that actually I wasn't the only one. Let's put it that way. And there's many other people over there who are in this exact same trade. And they're doing the same thing as me. They don't talk about it, but they still have it on their books, and they're rolling it too. So, I mean, and did they follow me? No, I think they were in a 200 or 210. They were in the 210, 200 is what they were in. Now, I don't know if they still have it, and I didn't follow them on that, but we're all making the same decisions because Oracle was at a high IV, so, and at time, that's what we're doing, we're selling puts. But, look, this is a perfect example. Just get rid of it, folks. Because now I'm stuck in here. And, I'm going to stick it out because I figure, screw it, I'm in it this far, so the hell with it. Let it ride. But anyway, if looking at Oracle, it is up today, and you are getting a little bit of a volatility bounce. So if you did have some short puts, you are going to get some relief. I kind of like it now that they actually came out with earnings, and there's a little bit of like catalyst for it, because before this, this thing has just had like literally nothing. But what I would do here, if you're looking to do something in Oracle, I like going out to January. And I like going out to January, and I like buying the 200s. I like the 200, 210. It's 40 points away. I get it, but this is probably going to be about $1.50 or $1.60 today. But it's a cheap enough trade to where you could still get engaged on this and then not really risk a lot of money. And look, I know there's not a big probability of profit, but given the way this thing is traded, I would stay away from selling puts here, because it's not going to take an awful lot to, if you decide to sell puts into this, and let's say you did, if you were going to sell puts into this, you'd likely do something around the 140 or 150. This thing could very easily snap back, and then you'd be in a position where I'm in, and then, then what? Then you're just sitting there with your thumb up your ass. So again, not everything is a sell options opportunity. It's not. Another trade that I like also is a calendar spread. I kind of like a calendar spread where you go out to January and buy the 200 and then come back here in June and buy the 200 or sell the 200. Now, it's a little pricey. It's a little, but you're getting yourself about 13 deltas overall on this trade. You're kind of selling a little shorter term volatility on this, and you have the capability to roll this, right? You have several expiries before January, and you can kind of buy yourself a little bit more time and still kind of sell some premium here on the call side, because let's face it, an IV rank of 70, there's definitely going to be call skew in here. And at least call skew in that the premiums on here are going to be a little exploded. And you can work it that way. The only problem, again, with this trade is that it is a little pricey. You're going to spend $1,000 as opposed to, $200 or $300. So that's it. That's all I got to say about Oracle. I think another position that I'm really liking that I may add to again is I am short this. Where am I? This IGV, which is the iShares Expanded Tech Software. Now, software, as we all know, and I'll go over this chart. Software, and I have it up here. Here's the IVG. Software has gotten absolutely destroyed, right? I mean, software stocks in general. And if you look at this as a daily, right? From their highs, they are down huge. I mean, this thing was 117, and it's $86. I think there's more downside. I think this thing has potential to get down to not only like 75, another $10. I think it has potential to get down here to $60. Now, that's not ultimately my target. My ultimate target is going to be to retest these lows again. I think this little bit of a bounce here is just more. I think it's more of these companies adding to their buybacks. But I think fundamentally speaking, I just don't see things turning around for any of these companies anytime soon, and at least in the next 6 to 8 months. Again, that's just how I see it. This chart looks very bearish, in my opinion. I don't know if it's going to be able to recover this bounce. And so I'm short, and I'm likely to get short again if we do bounce a little further. I kind of like $90 as like another spot. But what I would do in here, and you can see I'm just doing a little calendar spread. I got a 90-85 calendar spread. I would likely do the same thing, but maybe instead of doing a 90, and the nice thing about this is it does have pretty good liquidity, right? There's some decent amount of liquidity in here on both sides, but also it's got dollar wides, which is great. So you can play around with this one. But what I'm likely going to do here is I'm going to either layer in possibly like a 91 or 92 or even an 89 strike. So there you have it with that. And that's kind of another one that I've, and as I said, a lot of the trades I've been putting on lately have been a little to the bearish side. And then with that being said, that's kind of it in a nutshell. You can see overall, yesterday was kind of led by oil, semis, many of the metals, even biotech and China had a little bit of a move. And then on the downside, a lot of things that, we've gotten hit before, which is, again, software, ARC, airlines have just gotten absolutely pummeled through this as well. So, and that's it. And so we wait for those numbers coming out at the bottom of the hour here in about 15 minutes. And that is kind of my take on things. And I know I rambled a bit, and I just hope this helps. And so have a good one.